So why is the stock market dropping and why are we seeing a lot of weakness in the markets right now? So the short answer is it's because of the rising bond yields, and they're really weighing down on growth stocks valuations, as well as online retail companies and the tech sector. So that's the short answer. What's going on, guys? My name is Xander with Pltr Trading Academy. Today, what we'll be doing is we'll be taking a dive into what the SPY is telling us from a technical standpoint, what the NASDAQ is telling us from a technical standpoint, and what opportunities our team are paying attention to as far as the week to come, and what stocks that you guys should be paying attention to as well. So the first thing that we're going to be taking a look at is going to be the S&P 500, which is the SPY. So that's the chart we have up right now. If we're taking a look at what's going on with the technicals, we see that obviously when we saw the market selling off about a week ago, we saw that double bottom happen, and then we saw that recovery. If you look back to our previous video that I'm going to drop right up here, you're going to see that we actually predicted this. We talked about this double bottom happening and this recovery happening, and we actually were able to capitalize on this recovery as it was happening. Now what we're seeing is we're obviously seeing weakness because of those bond yields, and we've dropped down to this support level down here at 424. And not only once, but this is the second time we're dropping down to this level. So from here on out, what we're going to be doing is we're going to be paying attention to this support level, making sure that we hold the support level. We're clearly not in the channel that we've been trading in for the last pretty much year. So let's go ahead and zoom out. That way you guys can see that channel. So if you can see all the way back, well, it goes back to pretty much January. We can see that we've been trading in this upward channel that we've been pretty much respecting the entire time. We haven't always dropped down to this bottom trend line, but we tended to bounce on this 180-day and 200-day moving average. And then just recently, we started seeing this sell-off happening. So we are at the moment making lower lows. Clearly, we dropped down to 430 on that market sell-off that we saw last week. And then we ended up seeing this recovery happen. And then we got rejected by that 180-day and 200-day moving averages. So as of right now, we did drop below the 200-day moving average, which isn't the best sign, but there is still hope, right? So we'll see kind of how things go. Nobody can really predict where the market's going to go, but we can predict where it's going to go in the short term, right? So as far as the long term goes, obviously this is not a good indication, especially when we're getting rejected by it, as well as the fact that we're making lower lows. However, we did come down to this, like I said, $424 support level. We did find a support there once, and we found a support there twice. And so let's see if we do end up recovering. Our next goal is going to be to break this $438 level. Once we do break above that, that's going to be a good indication. And then after that, we're going to be watching this 180-day level, the 200-day moving average, 100-day and 80-day moving average. And if we break that, then that means we're going to essentially come back into this channel that we've been trading in. If we don't, expect lower lows. But the first level of support that we're going to be watching is that 424 level, as I've mentioned before. Looking at the RSI, we're looking that we are starting to trend to the upside here. We are in oversold area, in oversold territory, and the MACD, it's not looking too hot, but the week did just start, so we'll see what happens. We have seen some green in the after hours today. We saw some weakness on Monday morning. We ended up dropping another, let's see. It was another 1.55% that we dropped on Monday, and then we ended up stabilizing. So like I said, we have stabilized there before, so we're going to see if we're going to end up holding this support level. So that's pretty much what's going on with the SPY, the S&P 500. Taking a look at the NASDAQ, we're going to take a look at /NQ. /NQ. It should be reflecting very, similar patterns if we're taking a look at this as well. So, pretty much the same thing that we're seeing in the SPY, we're seeing in the S&P 500, been trending up, holding above the 180-day, 200-day, and then we ended up seeing that market sell-off, and now we're seeing that sell-off due to bond yields, right? So we'll see kind of what happens. I'd really be paying attention more so to the S&P 500. That's pretty much, the tell-all that's going to tell us where things are going to go. As of right now, with the S&P 500, with the NASDAQ, what we're going to be paying attention to is we're paying attention to that 15-day moving average, the exponential moving average, which is this blue line, right? Until we break above it, expect more downside. Once we break above it, that's when we're going to really expect a recovery. So if you can see that, when we had that double bottom when the market was selling off, we broke up to the upside above that 100 or above that 15-day moving exponential average. And then we ended up trending to the upside until we broke below it again. So once again, we're pretty much watching the same exact thing. That's when we're going to really know when the market is starting to turn around. So let's go ahead and jump into some of the opportunities that we're paying attention to for when the market does begin to recover again. As you guys have known, or as you guys know from the previous session or the previous stock talk that we talked about when this market was selling off the first time, what I said in that session and what I usually like to do when we do see these market corrections, these market sell-offs, is I like to focus on strong companies, blue chip companies, blue chip stocks, right? So the first one that we're going to be paying attention to is going to be Apple, AAPL. So this one, obviously, we're going to see quite a bit of selling happening in all of these stocks because of the overall market, right? But taking a look at the Apple stock, we can see that we haven't been at this level since pretty much all the way back, July, right? So July was the last time we were at this price point. So it's been quite some time since we've seen such cheap stock prices as far as Apple goes, right? It's been, a couple months. So the fact that we're here at this support level, once again, we're going to watch, just like we're going to watch with the SPY, we're going to watch if this holds up, right? So this is going to be a support level that we are very interested in making sure that it doesn't break to the downside. If we do break to the downside, that next support that we're going to be watching is 127. As of right now, the current support is 138. So we did see a little bit of a bounce here halfway through the day on Monday. So we'll see. Once again, paying attention to the EMA, making sure that we don't break lower on the support, and making sure that once we break above the EMA, we're going to be getting in, because that's going to be time for a recovery. So that's pretty much what's happening. We are fairly oversold here on the RSI. MACD not indicating any signs of a reversal just yet. So we might trend a little bit around the support level if we do begin to recover. If not, we're going to pretty much see a continuation to the downside if we break below it. So that's what's happening with Apple. However, that being said, if we're paying attention to the profit potential that we see here, if we recover to all-time highs, we're looking at about 11.38%. So that's what's happening with Apple. The next one that we're paying attention to is Ford, which is F. This one has actually been doing really well on Monday, and the MACD is starting to look like we might be starting to push higher, and we're not very overbought yet. So, this is a good indication. We talked about this one with the team on Sunday night. So whoever was paying attention to, on Sunday night, they ended up being able to profit a 3.7% profit just off of Ford, and being attentive and paying attention to this stock. We are holding above the EMA, so that's a good sign. We're holding above all the moving averages. If we take a look at the big picture, we do have some room to recover until we hit 1658, which is about 12.44%. It's looking good for Ford right now. We are dropping off as far as the demand goes, the higher we go. So approximately 1492 would be the level that I'd be paying attention to for a potential take profit area. Just because, first of all, the demand is dropping off at that point, and we also have a form of resistance at this point. So we are at 1438, 1486, 88 is where I'd be paying attention to a potential rejection. But based on the MACD, based on the RSI, we do still have quite a bit of room to run. So I would be paying attention to this one. We are at the zero line here on the statistical, or on the standard deviation levels. We are at the mean level, the mean line, so the zero line. So we do have some room to run. We can probably make it up to 1575 if we continue to push higher. I wouldn't be surprised to see that. The next area that we'd be paying attention to, that 1575 level would actually line up with this rejection level that we saw back here. So that would make sense if we do get rejected up here after we break this level. So that's what I'm watching with Ford. Like I said, MACD is starting to look like it's starting to push to the upside. So that's why I'm paying attention to Ford. The next one that we're going to be paying attention to is going to be PLTR. A lot of people have been watching this one, but this has been doing nothing but selling off. Once again, the very simple strategy is just paying attention to this EMA and waiting for it to break to the upside. Until then, it's just going to continue to sell. We do have a support down here at approximately 2264. The general area that we would have support in would be approximately right here between 2252 and 2062. So this general area would be a great support level just because we did find a lot of consolidation here a few months back. So I wouldn't be surprised to see I wouldn't be surprised to see us consolidate or find some support at this point. So that would be what I'd be paying attention to. We are very oversold here on the RSI, so it is a good indication that we might have room to run. However, PLTR hasn't been doing too hot lately. I would just be cautious with jumping in too early with this. We do have a 20% profit potential here, and obviously manage your risk at appropriate risk to reward ratios, right? But once again, pay attention to this level, pay attention to the MACD, right? It looks like we might still see a little bit of selling happening. We might come down to the support level, and if we break it, like I said, we're going to probably go into this general area. That's what's happening with PLTR. However, the 20% is very, very attractive. So definitely one to pay attention to. The next level that we're going to be paying attention to is going to be, or the next stock that we're going to be paying attention to is going to be Facebook, FB. So this one here, we're going to be taking a look at the support levels. Okay, sorry about that. I had some technical difficulties. So once again, with Facebook, what we're going to be paying attention to, we're going to be paying attention to these support levels. So the first level that we're going to be looking at is going to be 314, 313. And that's because we did start to drop down lower. That being said, this is the broader tech sector, right? So we are seeing selling because of the bond yields in this specific stock, right? So we are starting to see some selling going on, but we did once again start seeing a bit of a recovery halfway through the day. We are very oversold here on the RSI, and then the MACD. Once again, we don't still have an indication of a potential reversal, so we might still see some downside happening. Once again, like I said, the first level is going to be 313 that we're going to be watching for support. But that being said, if we're measuring the profit potential to those, to that recovery to those all-time highs, 14-15% is what we're looking at. So stay patient. Once again, EMA, watch the EMA and make sure that you're getting in once we break the EMA. Facebook, a very strong company, very strong stock. We're not going to go anywhere with that stock. We might see a little bit of a rough patch just because of the overall market. But if you are trying to get into Facebook at a discount, this would probably be a good time to be paying attention to it, because when it does start to recover, you want to be prepared to jump into it and make sure that you're capitalizing on this recovery, right? The next one that we're going to watch is Snap, SNAP. So Snap has been doing fairly decent over the last year. We have been seeing, higher highs forming. We've been finding support here on the 180-day, 200-day moving average. That being said, we are starting to come in. We are starting to have earnings on the 19th of this month. So be prepared for that. And we did just break below the 180-day and 200-day moving averages. We can blame that on the bond yields increasing and rising, but we do want to still pay attention to the technicals, right? So we did break that support. So the next level of support that we're going to be watching is going to be this level right here. That's 49.22. Seems like quite a way down, but you can't rule anything out at this point, right? So probably won't be dropping to that next level support, but we are holding support down here where this is basically this general area that we have formed, right? So we drop down to this general area between 70.67 and 73.16. We did consolidate there a few weeks back. So then we ended up pushing up to 83. Now we're back in this general area. RSI looking fairly oversold, more so on the oversold end than the overbought end. MACD, once again, not indicating any signs of a reversal just yet. Once the market begins to recover, this is really probably when this is going to start recovering as well. But that being said, make sure that you're paying attention to the MACD. Once we start seeing a change of color, once we start seeing a break of this EMA, that's when you're really going to want to consider, hey, maybe it's time to, potentially jump into this opportunity. The next one that we're going to be paying attention to is going to be UPRO. So we talked about this one. This one's often on our watch list just because, this follows the S&P 500. This follows the SPY. So taking a look at the UPRO, obviously huge profit potential recovery. If we're paying attention to all-time highs, we're looking at about 16%. And obviously, if the market starts recovering, this is going to start recovering. So this one goes hand in hand with SPY. If you want to take advantage of the moves that are happening on SPY, but you don't want to pay so much, UPRO would probably be one that you can pay attention to, right? So we're more so on the oversold end. And, you know, like I said, the market's selling off. Once the market starts recovering, this is when this is going to start recovering. So we saw that double bottom in the market, saw a double bottom here. This recovered with the market recovering. Market started selling off. This started selling off, starting to see potentially a double bottom again. So pay attention to this one. EMA is your key here. Once we break above it, definitely could take advantage of this opportunity as well. The next one that we're going to be paying attention to is going to be Walmart, WMT. I feel like this one's going to really take off more in Q1 of next year. But as of right now, and that's more so because of the holidays, and a lot of people are going to be spending on the holidays. So, you know, I would expect the numbers are really going to come out in Q1 as far as, you know, what happened here in this last quarter, right? So as of right now, though, if we're paying attention to just the technicals, we're very oversold here on the RSI, which is a very good indication. We're here at a support of 135.06. And if we take a look at the big picture, we haven't been at those levels since basically June, right? So June was the last time we touched base with that level, and then we ended up recovering all the way to 152 and making higher highs, or making all-time highs actually. So now we drop down to the same exact level. That's the level that we're going to be watching here on Walmart. A really good indication here is going to be the fact that the MACD is starting to change color, and we're potentially going to start taking off. So that's one thing that is very attractive about this opportunity, is that, you know, the MACD is lining up, the RSI is lining up. We're at a support level. We haven't been at the support level since basically halfway through the year. And then as far as the profit potential, we're looking at about a 10.59% profit potential. So once again, if you are trying to jump into this, watch the EMA. That's going to be your sign to jump in, right? As far as, you know, what's going on right now, we're just making sure that we don't break any lower below the support level. So set your alerts if you are interested in this opportunity, and make sure to engage in it once you see value and once you start seeing an uptrend happening in this particular stock. As far as, you know, the sell-off happening, that's just built up a great margin for us to take advantage of. So that's what we're paying attention to with Walmart. The next one that we're paying attention to is going to be Twitter. This one, again, sold off mostly because the overall market has been selling off. So this one keeps on selling off just like everything else. We have been pretty stagnant here in this general area for the last pretty much few weeks, but we are starting to approach the support level down here at 56. We have ended up bouncing at this general area before. So this does tend to act as a support. So we'll see if we hold up at this level. So we had a resistance right back here, and then we had a support right over here, and then we had another support basically today when we ended up seeing a recovery starting to happen halfway through the day after this massive drop. We dropped pretty much from this resistance point all the way down to the support level. So let's see if we hold up here. If not, the next level is going to be 56. And if that doesn't hold, we're going to be going down to 52. As far as the recovery, I wouldn't expect this to go all the way to all-time highs, but I would expect it to go to, you know, those levels prior to the sell-off happening. So that's about 16%. And that also lines up with the critical volume profile level as well. So that's what's going on with Twitter. That's why we're paying attention to Twitter. The next one is going to be pins. Very similar sell-off happened because the overall market is selling off. So we have had a massive drop after earnings on the last earnings. So we had a huge drop happening here. And I've been pretty much very interested in this particular stock since that happened. Just because if we take a look at the big picture, we have seen some tremendous gains, and then we ended up seeing tremendous drops, right? So now we're at a new low, right? And so once again, we're paying attention to this, not only because the earnings, massive drop, we had the market selling off, and now the bond yields are causing it to sell off. Now we're at 49 when we were just at 81, pretty much, I would say 2 months ago, right? So huge opportunity here if we do begin to recover. And if we recover, not even to those all-time highs, but let's say to levels that were 2 months ago, we're looking at about 40% profit potential, right? And that's huge. So We are fairly oversold here on the RSI, which is a good sign. We have been there before though, so don't get too excited, but it's a good sign that we are oversold. Not too much volume happening here. We saw some huge volume happening here on earnings. We ended up dropping, and then that pretty much died off. And we've just been pretty much consolidating, slowly making lower lows. We just dropped to a new low. So we're at 49.23, 49.62 closed out the day today. But definitely an opportunity to pay attention to and watch. We have gotten much closer, or the moving averages have actually gotten much closer to where the price is. So if we do break above the moving averages, which is about $55, $56, we're probably going to start seeing a huge push to the upside. So pay attention to this one. Huge opportunity. As long as you're willing to stay patient and be attentive to this, you can definitely take advantage of this play. The next thing that we're going to be paying attention to is going to be Fiverr. This is one that we've paid attention to right after earnings, very similar to kind of what happened in Pins, right? Pins hasn't recovered yet, but Fiverr has started to recover. So we had a drop. We talked about it when we saw this drop became very oversold here. And then we started to see this nice recovery happening all the way back to 211. And now with the market weakness, we're starting to see a sell-off happening again. So the levels that we're going to be paying attention to here are going to pretty much be the same levels that we've been paying attention to. 152 for the low. And then obviously this has been a resistance up here. So that is a new resistance for us. So that new resistance level is going to be 211. So we're pretty much just watching the EMA at this point, but definitely a huge profit potential on this one as well. If we recover pretty much just to those highs of 211, we're looking at about 18.39%. If we recover to pre-earnings levels, we're looking at approximately 23.8%. So definitely worth your time to watch this particular stock. The next one that we're going to be paying attention to is Visa. This one here, we ended up selling off. We've been doing very well over the last year. We've been holding above the 200-day moving average. And then we started seeing a sell-off happening pretty much after earnings on the 27th of July. Yeah. So after the 27th of July, we pretty much started seeing selling. And then we started to pushing up. So we did find support at 220. And we have been struggling to break through that 200-day and 180-day moving averages, right? As of right now, though, we did see some selling today on Monday, market weakness. And so then halfway through the day, we saw a nice recovery. So what we're watching is a break above the 229 level, which is going to be the 200-day moving average. Once we see a break above that, even if you jump in on that break, a recovery to those all-time highs, we're looking at about 9.32%. And that's being a conservative trader and approaching this from a conservative standpoint and really jumping in on it once, we see that confirmation of the 200-day moving average being broken. If you even jump in right now, obviously you can manage your risk at approximately 3% and have a profit potential of about 10.72%, right? So risk 3, make 10. That's not bad, right? And considering that Visa is a very, strong company, they're probably not going to go anywhere. So you shouldn't be worried too much about them. The next one that we're going to be taking a look at is going to be PTON. PTON here, taking a look at PTON, pretty much sold off down to the support level that we had back in May. So we're pretty much at this same support level, very oversold here on the RSI. MACD is starting to signal a potential downward momentum. So we'll see if we continue any lower. As of right now, I am going to be watching the support level at 79.61. Once we do potentially see a bounce here from current price points to pretty much those highs, we're looking at about 46% profit potential. So if you even get in right now, you're probably going to be risking about 5-6% for 52%, right? And that is if we cut losses right here just under that support level. As of right now, though, like I said, that's if you jump in right now without jumping in with confirmation, right? If you jump in with confirmation on the break of the EMA, obviously you're losing a few percent, but you're still locking in 45.9% if we do recover to those previous levels, right? So that's what we're watching with PTON. Oversold on the RSI. MACD's kind of, just not telling us much right now. But, if we do start seeing a bounce, we're probably going to start seeing momentum shifting to the green on the MACD. So pay attention to that. Just keep an eye on this, set your alerts. And, if you see value in it, definitely take advantage of this. The next one's going to be Starbucks. We watched this one last week as well. This one didn't do too hot last week just because we ended up selling off and there was a lot of weakness in the market. But That being said, we did end up finding support at this level. Let's draw out our supports. We had our support down here. We ended up coming down, bounced here again, and now it looks like we're attempting to break through the 50-day moving average. So that first level of resistance that we're going to be watching is 119.64. Level of support we're watching is 109.09. Obviously, wait for that break of the EMA. That is what we're always going to be talking about. We talk about this a lot. You can risk 3% here for a potential 7%, right? So this is a 2-to-1 basically risk reward situation just to the previous resistance that we got rejected at before. All-time highs, we're looking at about, 12.27% with the 3% risk. We have seen some strong support down here. So, I wouldn't be too surprised to see this continue up higher just because we have consistently found support at this level. Patterns tend to repeat themselves, but like a lot of people say, they don't have to, right? And they definitely don't, right? They don't have to repeat themselves. So we can definitely continue lower and continue to sell off. But from what we're seeing right now, we're at a critical volume profile level. So I wouldn't be surprised to see this push higher, at least to that previous resistance. So that's about 6.82% of profit potential. That's what we're watching with Starbucks. If we look at the big picture, they have been doing very, very well. Overall, they've been pretty much trending to the upside. And we've just seen a lot of consolidation here just because of the market being so weak and a little bit unstable, to be honest, in the recent few weeks and, in days, right? So, pay attention to this as a potential opportunity. If we do end up recovering to those all-time highs, that would be great. But don't count on it. Count on that first level of resistance, if not even the 200-day moving average being that first level of resistance, which is about 115. So that's what's going on with Starbucks. The next one that we're paying attention to is going to be ARK. So ARK has been selling off for some time. We are at a very important support level. We found support there back in March. We found support there end of March again. We broke through there back in May and came down to this next level of support around 90, 97, more like 100. But for the most part, it was pretty much that level of support. So we can draw that out right here. And so now we're pretty much at this support level of 107.77. So those levels back in March. If we do break lower, which I don't think we will, but we very much can. We probably are going to come down to this 199 level. So pay attention to this. As far as the potential for profit goes, let's go ahead and zoom in and measure that out so that you guys can see a clearer picture. So taking a look at where we're at right now, if we recover from current price points to where we were before this sell-off happened, we're looking at about 10.35%. If we recover to that resistance where we've gotten rejected multiple times, we're looking about 16.97%. And if we drop, we have a drop of about 9.93%. So obviously manage your risk accordingly. But as far as the technicals go on the RSI, it looks like we are starting to potentially reverse to the upside. We are starting to see, oversold territory. So that's a good sign. As far as the MACD goes, I do expect this to begin to recover to the upside on the MACD. We haven't gotten a signal yet or a change of color, but we aren't seeing strong selling and strong momentum to the downside yet. So watch the EMA, watch the RSI, watch the MACD. As far as the current support level, make sure that, we hold above it. If we don't, like I said, we're probably heading to 96 next. So if we do, expect that first level potentially to be 113. That's a bit quick. And I don't think that we will get rejected at that point, but we very much can because the 50-day moving average would align with that level. As far as the next level, that would probably be the 200-day moving averages at 118. So that's what's going on with ARK. Pay attention to this one. Definitely a great opportunity to take advantage of if you're paying attention to it. The next one is going to be NH or UNH. So this one here, it's a little bit more on the expensive side as far as the stocks go. However, it is also more so on the consistent side. Ever since pretty much March, we've seen nothing but an uptrend on this one. We reached 431, and now we're starting to see massive selling happening. Very, very oversold on the MACD and the RSI. So it looks like we are potentially starting to recover. However, this one, it's very, very important to pay attention to the EMA because if we do break the EMA, even if you get in at the EMA and we recover to those previous levels before even the sell-off, not all-time highs, but the levels we were at above the 180-day moving average. We're looking at about 5.77%. So I wouldn't be surprised to see this. The RSI starting to curve to the upside. MACD starting to see change of color to the upside. So I think this one's potentially going to start popping off a little bit soon. So definitely one to add to your radar, add to your watch list, and keep an eye on this one. The next one that we're going to watch is going to be Shopify. So SHOP. So Shop, this one did very, very well earlier in the year. And then recently we've just been starting to see selling. We dropped below the 180-day and 200-day moving averages. And ever since then, we've started to sell off. Ever since pretty much that break happened, we've seen nothing but lower lows. And then we came down to this support level that has been acting as a resistance prior. So now it's a support level. We did end up finding a bounce. So let's go ahead and zoom in. Sold off today, halfway through the day, found a bounce, very oversold. And the MACD, we're not way out of the park with the MACD. So we can quickly turn around and start heading to the upside. Once again, watching the support level for a support at 1283. If this doesn't hold, we're dropping to 1174. If it does hold, we're probably going to start bouncing and recovering to the 200-day moving average, which also aligns with the resistance level of 1489. So that profit potential here, we're looking at about 14.1% profit potential. And if you jump in, even now, you can risk about 2.2 for 14%. So definitely one to consider. But like I said, I always advise you to jump in on the EMA break. So even from the EMA, we're looking at about 10.5%. And that way you have a lot more confirmation. So that's what's going on with Shopify. The next one's going to be Amazon, AMZN. This one here, once again, at a support level, soft selling because of the overall market, and then very oversold on the RSI. MACD starting to curve to the upside. So from current price points, we're looking at to the first level of resistance where we had support prior. Now it's a resistance. We're looking at about 4.1%. If we break above that and break above the 200-day and return to those previous highs that we were at prior to all this selling happening, we're looking at about 10.79%. Looking at Amazon on the big picture, this thing has been doing nothing. Let's go to the daily. That way you can see the big picture. Overall, this has been doing nothing but, trending to the upside slowly, right? So we ended up finding support here. This was a support back on the 23rd of last month. This was also a support back in May. And this was actually acting as a resistance in March. So this is a very critical level that we're at right now. So definitely pay attention to it. We're very oversold on the daily as well. And taking a look at it on the 4-hour, it looks like we are potentially going to start a recovery. So depending on how the overall market acts and behaves, we're really going to see what's going to happen here with Amazon. But definitely a great deal for Amazon and a great profit potential with very minimal risk. Even at this point, you can literally risk like 1% to make approximately 10.7%, right? So that's what's going on with Amazon. The next one is going to be Etsy. This one isn't an Amazon company, but it's not as big as Amazon, but definitely a great opportunity nevertheless. Paying attention to this one, we have been holding above the 200-day moving average for some time, the 180-day and the 200-day moving averages, and we just recently broke below it, but we've done that before as well, right? So we've broken below that level before. So if we're paying attention to this, we've pretty much been just holding the 200-day moving average as a support. And we have seen those recent dips happening, right? We saw this dip a little bit below it and then recover quickly. And now we're seeing the very similar thing. That one happened on earnings though. And this is pretty much happening because of the market. But with Etsy, I would be a little bit more cautious just because it's a good company. It's a strong company. However, it's not as stable as Amazon. So I would definitely wait for confirmation on the EMA before jumping in on something like this. From the EMA to those previous levels, we're looking at about 10.9%. And that's once you get confirmation. So there's no point of risking it, jumping in right now, especially when we're below the EMA and still selling off. However, do expect a potential break soon, right? So we're very oversold. We're starting to head up to the upside to attempt to break back up above the 200-day, 100-day moving averages, and the MACD is starting to see a change of color. So I would be very surprised to see if this does not pop back up to the upside. So that's what's going on with Etsy. The next one is going to be Snow. This is a company that IPO'd not too long ago, and it's been doing very, very well over the last few months, right? It pretty much IPO'd at the beginning of pretty much at the beginning of this year. Let's go ahead and take a look at the daily. Yeah, it was pretty much end of last year, beginning of this year. And so taking a look at it right now, we've pretty much been trending above the 180-day, 200-day moving average all of pretty much halfway through this year, right? So since May, we've just been trending above this area. We just dipped back down to the 100-day and 180-day, 200-day moving average. We've seen that happen before, and then we recovered. We've seen that happen before, and then we recovered, and now we're seeing it happen again. We are very oversold. MACD is signaling a potential continuation to the downside, but let's see what happens, right? So we might potentially jump up right off of this 180-day EMA. But definitely pay attention to the EMA, right? Even though we do tend to find support on these moving averages, the EMA is key, right? So I'm paying attention to it for that potential recovery to that 328 level, which provides about a 10.76% profit potential. And that, obviously we have plenty of room to run on the RSI before that happens, right? So that's what I'm paying attention to with Snow. The next one that we're going to be taking a look at is going to be Urban Outfitters, URBN. So this one here, we are at a support level. Once again, fairly critical support level. Obviously the volume's starting to drop off, but if we do see a recovery all the way back to those all-time highs, we're looking at about 38.1%. It looks like the MACD is starting to curl back up to the upside, signaling us a buy. And so obviously we have plenty of room to run still on the RSI. A support level right here, we are attempting to break above that EMA level, right? Last time we saw that, when we broke above the EMA level, we made about 5.5% here of a move before we got rejected. So first level of rejection, we're looking at 33.88. We're currently at a support of pretty much $30. So I would be having my support just under that at 2-3%. Whatever you find, comfortable, whatever you're comfortable with as far as the risk goes. And then you have a profit potential to that first level of resistance of 11.36%. So that's what we're watching here with Urban Outfitters, URBN. The next one's going to be GoPro, GPRO. GPRO, very interesting stock. I like this stock personally because I am a consumer of the product, so I'm very interested in this particular stock. That being said, though, we are at a very important support level from a technical standpoint, support level we had back in May. And so we ended up having quite a bit of support here at 970, and then we ended up breaking below that. And so once we did break below that, we did expect a support here at 898. If you look back at some of the previous weekly stock talks, GoPro has been on our radar quite a bit of time. So you can definitely see our breakdown and how we've walked through it up until this point, right? And so you'll see we had the support level drawn out basically because of the support back here. And so we ended up dropping down to the support level already, and then we recovered, dropped down to the support level again. So now I'm expecting a potential recovery. We are starting to look like we are fairly oversold here on the RSI. The MACD not having a change of color just yet, but I really, I find it hard to believe that this is going to continue to head lower simply because they did just launch a new GoPro, and that's catching traction. Obviously, the overall market's not really helping GoPro's case as far as the stock price goes, but as far as the company goes, they're doing quite a bit of things fundamentally that are obviously bringing a lot more value to the company. So I wouldn't be surprised to see this recover to at least that first level of resistance right here at 1076, which is about 19.15% profit potential, if not higher, right? So definitely one to keep an eye on. Keep an eye on the EMA as always, right? You guys already know the drill. And then obviously just stay patient with this one. Let's see if we find support. If we don't, obviously manage your risk appropriately. 2.53% for a potential 18, 19, 20% is not a bad risk to reward ratio to have, right? The next one's going to be Google, very stable company here. Saw a lot of weakness in Google just because of the overall market. Obviously, they're going to do very, very, very well long-term, consistently bouncing here on the 200-day, 180-day moving average. So if you ever wanted to jump in on Google, this would definitely be the time, right? So currently, we're at $2,675. We haven't seen. I mean, it's kind of at a support level, you can say. It's not very a strong support level because we don't tend to dip that low on these stocks too often, but we did find rejection here before, and then we found a support here as we were heading up. But for the most part, that's what we're basing our support level here at. I wouldn't be surprised to see this recover very, very quickly and soon, right? Especially if the overall market begins to recover, this is going to recover very, very quick. So if you didn't take advantage of it, then, or if you don't see value in Google, then, obviously don't take advantage of it. But if you do, then definitely take advantage of it, right? Taking a look at Google a few months back, right, when we had, a huge dip happen in the market, we ended up seeing that sell-off happening. It wasn't even as dramatic, but we ended up seeing a massive sell-off happening beginning of the year. And then back in March, we pretty much flatlined for some time, right? And then we saw a continuation of a push to the upside, and then so on and so forth. But something like this, we haven't seen in a very, very long time. So if you ever wanted to get a deal on Google, now would probably be a good time to consider paying attention to Google and paying attention to the EMA line to make sure that you can get in as it breaks to the upside, right? It looks like we're attempting to break to the upside here, so don't miss this. Pay attention to it if you want to take advantage of Google. The last two that we're going to talk about is going to be SCI. So this one here, very consistent uptrend pattern. Pretty much over the entire year, holding above the 200-day moving average. And now we're just pretty much testing this 200-day moving average. It doesn't have to hold. It can continue to sell off, but I wouldn't be surprised to see this bounce and at least recover to those previous highs. So I would be managing my risk probably at about, 3-4% on something like this. And obviously you have a profit potential of about 7 or 8% on this. So probably maybe 2 or 3% for an 8% potential for profit would not be a bad idea, but definitely wait for confirmation and make sure that you're paying attention to that blue line and the EMA. That way we do not see it break to the downside, because if it breaks to the downside, as you can see, once we break, it starts selling off. If we break up to the upside, it starts gaining, right? So we just broke above it. So this could be a great opportunity to consider. The next one that we're paying attention to is going to be JBL. And this is going to be the last one that we're going to talk about in this video. JBL, very strong, consistent company over the year, pretty much holding above the 180-day, 200-day moving average. And now we're just found obviously some weakness because of the overall market. Let's go ahead and zoom in and kind of dive in a little bit deeper. We were oversold here on earnings. We dropped because of earnings a couple of days ago, pretty much on the 29th of last month. So just a few days ago, we dropped, and then we started seeing a recovery ever since. Once again, I wouldn't be surprised to see this recover to 63.89 or 63.78. That's about 7.49% profit potential, but this does tend to make higher highs as it recovers. So I wouldn't be surprised to see at least that profit margin, 7.49%, 7.46. So this does have plenty of room to run on the RSI, and the MACD is starting to signal, positive momentum. So do pay attention to this one, set your alerts. If you see value, take advantage of it. And that should be it, guys, for this week's Stock Talk. If you guys found any value, make sure to like this video, subscribe, and share this with a friend. And I'll see you guys on next week's Stock Talk video.